What's going on, guys? Welcome to Own the Chaos. Another good afternoon for us in the OTC. Welcome to my channel. If you're joining me for the first time, I hope that you stick around for the end of this live stream. As always, for every day, I always open up questions for everyone at the end of the video. Whether it pertains to today's topic or not, it does not matter to me. As long as it's something obviously related to over-the-counter stocks, I am cool with that. As far as my returning subscribers, welcome back. I hope you enjoy this one. If you're still not familiar with what kind of account to use, whether it's a cash or margin account, that's what we're going to be going over today. Nothing too crazy, but just something pretty simple that I think maybe, I've been getting a lot of questions on. I know I've had a lot of new members coming in, and so I just kind of want to address that. I haven't had a video yet on this particular subject. So I kind of want to address the pros and cons of a cash and margin account. So just kind of welcoming everybody here. Damien, welcome, bud. Jason, welcome as well. David, what's going on, man? Just checking here, making sure. Okay, looks like everybody's coming in so far. Just want to give some time. Had some really good plays today. How about AXXA, guys? I don't know what the heck's going on with that, but good Lord. I mean, it was what, double zeros or triple zeros a few days ago, and now it's trading over 30 cents. Wish I would have gotten in on that one. Neil says, how's it going? Hey, man, I think this is the same Neil that bought one of my shirts, so thanks for that. If you guys are not aware, I do have shirts for sale. A couple of our members have bought some already. They look pretty awesome. And I've been just getting some pictures of people as they come in. It's pretty cool to see the level of support that people are providing for me in this channel. So I really do appreciate it. If you're interested in checking them out, there's a link in the description for that. I encourage you to check it out. You're not obligated to buy a shirt, obviously, and I don't really make any money off of it. It's just something fun for us to kind of participate in and unify the group a little bit. Me too, not a time on AXXA. Yeah, I don't know what was going on with that. Neil says the shirt's really comfortable, so glad to hear that. All right, so I'll go ahead and get started. So when we're talking about accounts, typically, you have two different accounts that you're dealing with when you first start trading. That when you go to set up with your broker, whether it's TD Ameritrade, E-Trade, any of those major brokers, they have a cash account and a margin account. And what a cash account is basically just it. That's just it. You're putting cash into the account, and all the buying power that you have is 100% of the cash that you put in. So anything that you put in is what you have power to trade with. That was a really loud car. Whatever you put in is what you have to trade with. And with a cash account, whenever you buy something and then sell it, you have a settlement period. The rules have changed a little bit since last fall. It used to be T+3 and now it's T+2, so you have a 2-day settlement period. So if you're selling out of a stock today is Tuesday, you won't be able to trade again with that money until Thursday. Yes, Thursday. So that is a T+2 rule. You have to wait for that to settle. Now with a margin account, you don't have any settlement period, but I kind of want to go over some more basics. Actually, I have some stuff written down. So one thing with a cash account is that you can't short sell. Not that any of us do that with OTCs, because you really can't. But if you are, with doing some other style of trading and you're interested in shorting, you cannot do that with a cash account. Obviously, there's not going to be any kind of credit checks or anything like that, whereas a margin account you will. And I kind of want you to get a feel for what a margin account is. So I like to describe a margin account as a loan account, because that's basically what you're doing. Or what you have the capability of doing. So whatever money you put in a margin account, it's basically your broker's giving you. It could be 2-to-1 or 1-to-1. So whatever money you put in, the bank's basically going to match however much you put in, and they loan you that money. So it gives you basically double the buying power. Some of them are different. It just depends on your broker and what they offer. But you're basically borrowing money from them to trade with. Now, for me, in my opinion, I think it's a very scary thing to do. It's a very, very risky thing to do. And I know we like to practice a lot of risk down here in the OTCs, but that's a level of risk that I'm not willing to play with. But Here's the thing though, there are advantages to a margin account. Now, if you have over $25,000 in your account and you're not privy to the PDT rule, and again, if you're not familiar with what the PDT rule is, it's a pattern day trader rule that the SEC has in place that you can't make more than 3 round trips of a stock or a day trade within a 5-day period. So you can't buy into a stock one day, sell out of it in the same day more than 3 times in a 5-day business period. 5 business day period. The same thing with margin account. If you have more than $25,000 though, and you don't want to deal with all that the settlement period of a cash account, and you're just looking to make day trades all day, then I think that a margin account may be beneficial to you as long as you're not borrowing money from the broker. That's where it gets a little bit scary. It gets a little bit risky for me, in my opinion. Now, obviously, it's going to depend on your level of risk. If you think that you're really good at this and you just want the extra buying power, I mean, obviously it's there for a reason if you want to use it. But in my opinion, I don't think it's worth the risk. You're essentially going into debt, and you don't know if you're going to come out on top on that debt. Because the other thing is that these brokerages are charging you interest for the amount of money that you borrow as well. That's why it's a loan account. Well, I know that they call it a margin, but essentially it's a loan account. So you're playing with their money, and then they're charging you interest. And then the other thing on top of that is that, say you're using that margin account and you're using margin funds, so you're using the funds of the broker, they can call that at any time. So if you're in a position and you're not doing so hot, and the brokerage firm sees that and they want to call their note or their loan, they can do that. They'll send you a notification or a email or call you, whatever, letting you know that they're going to be selling your shares at will because they want basically their money back. And if they don't get their money back on your return, it's then your responsibility to pay the loan back out of your own pocket. So like I said, in my opinion, that's a real high level of risk that I'm not willing to mess with. I mean, if you have a huge chunk of money, say $25,000, $30,000, $40,000, $50,000 that you're using on a margin account, and then you borrow that same amount from the margin account, and then for whatever reason something goes wrong and you really screw up your account, then you're not only did you just lose a bunch of money that you invested, but you're also owing money to whatever brokerage firm you're borrowing from. So in my opinion, that's just not something that I would mess with. And if you're first starting out, if you've never traded a day in your life, obviously I always try to recommend that you start off first with a paper trading account. So Thinkorswim or any other trading platform that offers you to trade with fake money in order to kind of get yourself familiar with trading, whether it's my style of trading with the OTCs or if it's other styles of trading within Techbuds-Solutions or whatever. If you're looking to short, just start off with paper trading so that way you're not risking your own money. And then after that, once you start to get more comfortable and familiar, obviously you want to start putting your own skin in the game, because I think you bring your level of learning to a whole different level if you are using your own money. It really starts to get serious at that point. But at least with paper trading, you get your feet wet and get your training wheels on, so to speak. But that is basically it as far as a cash account and a margin account goes. Now, whatever works best for you, I guess, is going to be your own decision. But I think starting off with a cash account is going to be your best bet. That way you're not worrying about, having to borrow, or not. That way you're not tempted to borrow money, especially if you're just starting out, because the chances of you, failing a few times in the beginning are probably pretty great until you get used to how to actually trade. Later on down the road, if you start to build up your account and you have a margin account, and you want to start a margin account, I think that would be fine, as long as you don't try to borrow that money from the bank. I'm a big stickler for not borrowing money from anybody, and I think that's just a huge risk on your part if you decide to borrow margin funds for that account. The only reason that I would say to use a margin account is if you're not looking to deal with the cash settlement period. Once your account gets bigger and you have over 25,000 and you're looking to make day trades or whatever, then I think that would be an acceptable play to get a margin account then at that point. So that's just it You know, it doesn't look like I got too many questions, but I'm going to go ahead and open up the questions anyway. If you guys have any, whether it's about today's trading day in general, or you know the types of accounts that get offered on the topic that was discussed today, certainly we'll be happy to answer those for you. Neil says, if you buy stock today and sell Friday on cash account, funds instantly available. Okay, so this Friday, yeah, I'm sorry, I got my days mixed up. So then today's Tuesday. For those of you who are going to be watching this in the future, so if we're using Tuesday as an example, you sell out today, it's Wednesday, Thursday, and then your funds will be available to trade with on Friday. So that's what T plus 2 is. Again, it used to be T plus 3. It used to be 3 days, and the SEC changed those rules. I think it was like back in September around Labor Day or so that they changed those. So yeah, I guess this is going to be a real short video for y'all. I don't have any other questions here. It looks like couple things. The stocks that I covered yesterday look like they're shaping up to be pretty good so far. MCGI closed up ticker 2, as well as well, FBRD was flat, and I think what was the other one that I covered? The other one that I covered was green too, but I can't remember which one it was at this point in time. Let me look real quick. Sorry about that, guys. I don't want to steer you wrong. GMOS. That's what it was. That closed, I think, 20% up today as well. I think the closer we get to the custodianship on GMOS, I think the more we'll start to see some activity with that one, and it could potentially run again. Historically, with those Acaro stocks, that's usually what happens. We're just going to see where that one takes us once custodianship takes over and reinstatement happens. All right, well, that's all I got for you guys today. If you have any other questions, of course, you can leave comments in this video as well. I always look at the comments. I always answer everybody's questions to the best of my ability, and of course, if I don't have the answer, I will certainly look for you and do some research on that. Somebody asked if I was out of RSII. For those of you who aren't familiar with our chat group, so I have a chat group within Discord. The link's down in the description. Someone was asking me, I was in RSII earlier this month. Yes, I actually sold out of RSII. The news today that was released didn't seem to really affect the stock any, and in that, in my opinion, expresses disinterest, and so then I was not going to bother with it any longer. Here's a question here. Is having a margin account trading low volatility stocks bad? No, it doesn't have anything to do with the volatility of the stock, whether, you know, as far as what account you use. Really, in my opinion, the one disadvantage that a cash account has that a margin account doesn't have is that settlement period. So when you're using margin funds or using a margin account, there is no settlement period after that $25,000 magic number. You can, you know, there's no settlement. So whereas a cash account, you got to wait to use that money again once you sell it. Margin accounts, you don't. And so that's the advantage. I think that once you reach that $25,000 mark, if you want to move over to margin accounts so that you can trade more freely without having to worry about those funds settling, as long as, like I said, you don't borrow that money, I think that you're going to be okay as far as that's concerned. Someone said, I'm still getting hairy on RSII. Yeah, same guy. So yeah, RSII, again, that's just, for me, in my opinion, is just something that I decided to get out of because it looked like, you know, the catalyst was going to be good, and it wasn't. It was just news that was kind of like what we already knew. It was kind of like fluff, and just time to move on. Sometimes you just got to do that. All right. Well, that's all I got for you guys tonight. I do appreciate you tuning in. Please check the links down below for our Discord chat group. And I was discussing the t-shirt. You can buy one of these t-shirts or one of my OTC t-shirts within the description. The link, you can go ahead and check that out. For me, that is all I got. As always, guys, I will see you before the bell. And B. Smith is out. Take it easy, team.